All right, good morning, everyone. Let's do a quick sound check in the Essentials room and over on YouTube. Happy hump day, happy hump day. All right, Cheryl, Russ, Matthew, Mirza, Lorna, Jay, and Jason. And then we got Peter up north. Hey, Peter, did you get hit with that? I guess we call it a thunderstorm. Took the dog for a quick ride yesterday. She likes to put her head out the window and surf the wind. We got caught in the downpour. But all right, guys, so a couple things to show you here. Quick reminder, tonight is the night. So at 7 p.m. Central, we'll be doing the official release webinar for the Big 3 Squeeze. So I'll put the link for that over in the Essentials room. And then over on YouTube. But yeah, guys, come through. Pour yourself a nice adult beverage, perhaps a couple, and I think you'll enjoy it. We're not going to go through too many slides. I think I maybe have 20 slides total. So I want to get through the slides, kind of talk about the basics of the indicator, and then just, more so spend some time on the charts with y'all. Looking at the good stuff. But all right, so kind of good timing here. Good timing to show off the indicator. We've got a couple of brand new daily squeezes setting up. So the S&P futures, the NQ, the S&Ps themselves, the QQQ. I believe, the IWM has a new daily squeeze. NVIDIA has a new daily squeeze. So now we get to play my favorite game. Which way does the squeeze fire? And you had a daily squeeze back here in May. That all worked as advertised. And then you had another squeeze here in mid-July. And then remember, you also had squeezes on the 2-day chart. So that definitely helps if you have squeezes on bigger time frames. So on the 2-day here for the futures, you had the squeeze in the buy signal, and then same thing on the weekly chart. So point being, your last couple of squeezes have all fired to the upside. But a few things here. Right now, the indicators, they're not giving us the immediate suggestion that this daily squeeze is going to behave like that daily squeeze and that daily squeeze. Couple things make the current squeeze a little different than those bad boys. So as far as what the indicator is communicating, first thing we have here is the bull score and the bear score. So that takes our momentum criteria, that takes our structure criteria, moving average crosses rather, takes everything that I care about and pretty much cranks out a report card. Right now, the bulls have 1 out of 5. So that kind of looks like my report card from back in high school, and the bears have a 3 out of 5. So with a perfect score being a 5, right now the bears do have a little bit more control than the bulls. So there's one way that things are different right now. Back here, bulls had 5 points, and they had 5 points right there as well. Now, of course, this plays a role in the scores. But the other thing that's making this different is back here, the big 3 indicator is printing that daily buy signal. So now you have the marriage of the squeeze, which is going to give you compression, right? Gearing up for a nice push. And the indicator telling you structure, momentum, everything during that compression is aligned for a push higher. Now we're in a squeeze, and the big 3 indicator is neutral. It's not screaming the squeeze wants to fire short, but it's no longer screaming that things are perfectly aligned for it to fire to the upside. So the indicator goes from bullish to neutral. For now, we're under the 21 EMA, and that all plays a role in the scoreboard. Couple more points for the bears. Then you've got the momentum part of the equation. So notice on the momentum histogram, from May till pretty much from May through July, when that daily squeeze fired, when that 2-day squeeze fired, and then eventually when the weekly squeeze fired, daily momentum was supportive of that push. With our big three indicator, there's two parts of the equation. There's the structure and there's the momentum. Right now, structure is still fine. The problem here is momentum. May, June, July, the bulls have basically got a fresh tank of gas or a full tank of gas. Last week, momentum crosses negative. So now, again, that momentum part of the equation, at the moment, not really supportive of that daily squeeze firing long. And that negative crossing momentum, we're seeing that across a lot of different charts. So one interesting one is the S&Ps, the cash product. Check this out on the hourly chart. Hourly momentum peaked at the beginning of July. Price continues to try to go higher. Ever since mid-July, momentum has basically spent all its time under the zero line. So we're not only seeing that on the daily chart, we're seeing that under the surface. Right? And that divergence where price tries to go higher and momentum kind of already tapped out, if they can't correct that, right, and they can correct that by doing this. If they can't correct that, that divergence eventually catches up to price. And you could point fingers towards earnings. I think Apple's a really good example of this. All right, we could say, oh, it's earnings' fault. This happened because of earnings. Check out the divergence here on the daily chart. Momentum said, hey, I'm cooked. Back in the beginning of July. Price is still trying to go higher. Because they could never really correct that momentum, like they did back here, and rip that back above the zero line, that divergence is now catching up to the price. So we're seeing that in a lot of different charts. The Qs, the old Q-tip, with the exception of a few days, momentum's been under the zero line since early July. So what makes that daily squeeze a lot different than the current daily squeeze? Before that squeeze fired, momentum was supportive of that push higher. Got the buy signals, and off we go. So right now, that's kind of the major difference. It's not a structure thing, so visually the charts are still solid. It's just more so a momentum thing. And again, this doesn't have to really this doesn't mean the market has to trade lower. What it could mean is the month of August is just kind of a chop fest. And we might be in that daily squeeze for, who knows, a couple of weeks. But I do think for now that's the biggest thing to be mindful of. If you try to approach this daily squeeze, or a better way to word it, if you try to approach your swing trading right now the same way you were approaching it from May through July, this could change today, but right now it's not the same setting. So things to be mindful of. And with that being said, guys, I'm just kind of in hurry up and wait mode for now. We did put on a little short yesterday. So we've got a September expiration put debit spread on the S&Ps here. But really, it's more chop than anything for now. So I think a little bit of patience will go a long way. And then as far as scan results or a watch list, I don't really have too much of either of those right now. And here's the reason being. Until I can get a stronger sense of which way does this daily squeeze want to fire, it's tough to figure out which way I want to trade the stocks. So imagine today if I get short anything. Sell some call credit spreads, buy some puts, and then a week from now this daily squeeze fires to the upside. I'm probably crap out of luck. If I get long everything today, all right, I'm going to buy some Nvidia, I'm going to buy some AMD, some Amazon, and the squeeze fire is short. Again, I'm going to be crap out of luck. If I do either of those things, I'm shorting a bunch of stocks, I'm getting long a bunch of stocks, and the month of August is just chop, well, then I'm going to get beaten up either which way. So the reason that everything worked really well from May through June through July was because the stage was set. If I think of every stock that I traded in that run, Netflix, Nvidia, AMD, Apple, LRCX, Pinterest, Zillow, Mara, those trades all worked really well. In reality, it had nothing to do with those stocks. They were all A+ setups. So on their own, they were aligned for a push higher. But then the market gives you the biggest thumbs up possible. 1 squeeze, 2 squeeze, 3 squeeze, off we go. The best time to be short for a swing trade is just the opposite. S&Ps have a daily squeeze of the sell signal, a 2-day squeeze of the sell signal, a weekly squeeze, printing a sell signal. Those squeezes all fire short. You're going to be in good shape being short pretty much anything. So again, what makes this kind of a tough spot for swing trading is we just don't have the same clarity. At least not yet. So that's where names that look really, really good can quickly start to fall apart a bit. ADI, for example. We had some calls here in ADI. Recognized that the market was starting to shift. We took the trade off right there. This goes from being an A+ setup to a daily squeeze that for now looks a lot more aligned to want to fire short. Nothing to do with ADI, everything to do with the market. Affirm, AI, I do, US Steel, and the list goes on and on. So to me, that's where there's really no point right now to focus so much on the scans and the individual stocks. I can find something that's A+. Right now, Intel on the Big 3 squeeze is considered A+. That label's green. Bulls have a perfect score of 5. The Bears have no ground to stand on. So take a screenshot of that. In my opinion, that's the best possible setup going when the market allows for it. When the market allows for it, an A+ setup means you have a squeeze. So we're gearing up for a move. We have a buy signal. So now we can call for direction out of that squeeze. And the most important thing is we're trading at the buy zone. It does me no good if I'm trying to catch the squeeze up here. Got to catch these suckers right there. I really don't think it gets any better than that. That's not going to work. It's going to become a lot more of a needle in a haystack kind of game if the S&Ps and the Qs are stuck in chop or if they actually trade lower. Same thing could be said for building out a bearish watch list. In any market, I can run the bear scan. I can find something like McDonald's, and the indicator's telling me, hey, man, everything you're looking for a short, you've got it here in Mickey D's. That label's red, telling me, hey, it's an A+ setup for a short. Got the squeeze, got the sell signal, and we're at the entry zone. You short McDonald's today, and then next week we look up and the S&Ps have traded lower, the Qs have traded lower, the Dow's traded lower. That trade should work really well. If the S&Ps are stuck in chop, or they turn the corner and go higher, the short's not going to work. So therefore, a little bit of hurry up and wait. And that's what I got for you guys. The great equalizer here is that daily 21 EMA. Above it on a closing basis, the bulls can start the renovation process. Below it, scoreboard says bears have a little bit of edge. So patience. But all right, y'all, any questions, any chart requests, drop them in the chat here and we'll take a look. Q's coming back a wee bit. Not a lot bit, but a wee bit. MB, so Amazon and Google, for now they hold up really well. Scoreboard says for Amazon, the bulls are up 3-0. So Amazon looks really good. And then I think Google's got the same score. Yeah, the bulls are up 3-0. Both Amazon and Google look really, really solid. Again, I think it comes back to the same thing. They could buck the trend. QQQ fires a daily squeeze short. Again, guys, always think in terms of probabilities. Probabilities would suggest if the Qs fire this daily squeeze long, well, then Google and Amazon, being that they look the best, they should rip. The Qs just chop for the rest of August. Amazon and Google could continue to trade higher. It's a lower probability, but they could continue to trade higher. The Qs fire the squeeze short, take out the daily 50. Yeah, Amazon and Google could buck the trend, but now the probability is even lower. So I really think the focus has to start here. S&P's, Qs, and then you take it to the stocks. And then the only other thing here about Amazon and the big goog, I would personally like to buy them a little closer to that daily 21. But yeah, for now they look great. What's up, Peter? Peter's got AMT and CPNG. AMT is a great looking short. Yeah, that's a really nice looking short. And then notice all the other nested squeezes. So if you find a daily squeeze and that's all you have, as far as squeezes go, that's the only time frame. That can lead to a nice flush. You take your paycheck and you move on. Where that daily squeeze can just really be the beginning for a much bigger move is when that daily squeeze is nested inside of a 2-day squeeze, a 3-day squeeze, a weekly squeeze, and a monthly squeeze. That daily squeeze can kind of trigger the domino effect. There's your level to break, right? That 178-ish has been support for not quite a year, but close enough, I would say. May not be the easiest level to break. If they can break it, that should open the door for a really nice flush. And then CPNG, this would be good stuff, Peter. So Peter's hitting us from both sides, guys. AMT for now is an A plus short. And then CPNG would be an A plus long. And this one also has that nested squeeze. A 1 hour, a 2 hour, a daily, a 2-day, a 3-day, and a weekly. I like them both. So Rob, good question. So Rob's asking if we have a daily squeeze that's only 1 day in, like the S&Ps. And today will be day number 2. So Rob's asking, do we wait for a set number of bars? 2, 3, 4, 5. In my experience, you'll find most squeezes on a daily chart, they tend to print for at least 3 to 4 to 5 days. It just kind of seems to be the case. Then there are times where you'll get the oddball 1-day squeeze or the 2-dot squeeze. So Tesla back here in May, that was 3 dots. And then from there, Tesla had a decent push. Not a great push, but a decent push as the stock almost doubles. Yeah, good question, Rob. I don't have a set rule of thumb. I think by default, they tend to print for a few days. My major concern is what's going on inside the squeeze. So if the squeeze is 5 days in, but I'm not getting anything to trigger the entry on my lower time frames, well, I'm not going to pull the trigger. If the squeeze is 1 day in and the 5-minute, 15-minute, all my lower time frames are printing a buy signal, I'm not going to wait for another 3 or 4 days of squeezing. At that point, I would jump in, but with the understanding it's a new squeeze. So it wouldn't be the craziest thing for another few days of compression. And then you get the good stuff. Awesome question. All right, so Tesla here. So keeping the opinion out of it, scoreboard says Tesla leans a bit more in the favor of the Bears. Bulls get 0 points and the Bears have 3. Right now, Tesla's a combination of, you have the S&Ps and the Qs where it's more so a momentum problem. Tesla's kind of a mix of a momentum problem and a structure problem. Price is under the daily 21. It's under the daily 50. And you got your negative momentum cross back in mid-July. Back here, you're above the 21, you're above the 50, you have a buy signal, you got momentum. Do I think Tesla falls apart if the market rallies back to the highs? Probably not. So I think it comes down to the S&Ps and the Qs first. Based on the picture here, for now it does look like it's easier for Tesla to go lower than higher. You've got a lot of squeezes though. 5-minute, 15-minute, and a 30-minute. While we're here, let's check out the monthly squeeze. For what it's worth, guys, I think any flush we get, at least until proven wrong, that flush makes for a good buying opportunity in a lot of these monthly squeezes. Top dog being Apple. Give me Apple back at 170. I would buy some 200 calls that expire in about a year. I'll do it in a different account, so I don't have to stare at it every day. But yeah, I would buy some out the money calls, give them plenty of time, and then just let that bad boy go. Monthly squeeze eventually fires long. That could be anywhere from 8 to 10 plus months of just really steady momentum. Exhibit A. So bigger picture, but that is in the background. Yeah, Dave, let's go back to AMT. So as long as they keep that momentum line below zero, to me, it's valid for a short. If we get that cross, everything telling us it's a perfect short will change immediately. Right, that would have been the case back here. Got the squeeze, got the sell signal. As soon as you get that positive cross, the indicators say, hey, chill out on the short. So what I wouldn't want to see is momentum starts to curl higher, curl higher, curl higher. You want to see this dump. So that's what I'm going to look for on American Tower. Baidu Mike. What's up, Baidu Mike? What do I think of BTU? British thermal units, huh? I think I like it a lot. I like it so much, I'm going to put it on my own watch list. Do you happen to know if this would have any correlation to UNG? Not to get sidetracked. UNG is getting kind of interesting here. Sam showed me this one last night. But yeah, man, I like that one a lot. I like it a whole lot. So inside the daily squeeze, every lower time frame has a buy signal, except the 5-minute. But your 4-hour, 3 or 15-minute print a buy signal. And also inside the daily squeeze, we have a 4-hour squeeze. We have a 2-day squeeze, and we have a monthly squeeze. So with more of a focus on the short term, what makes this kind of combination powerful is if the 4-hour squeeze can fire long, finally getting through the 4-hour 200. But yeah, if the 4-hour squeeze fires long, that's going to trigger the daily squeeze to most likely fire long, and then they might go hit the 2-day squeeze. Yeah, really, really clean. And then the inverse chart would be the perfect short. That daily squeeze has nothing but sell signals inside of it. Good stuff. Good stuff. MB, they work for now. They work on Thinkorswim and TradingView. All right, Cameron's got Boeing. Boeing holds up really well here. Yeah, Boeing holds up really well. And this week, the weekly squeeze just fired long. So I think this thing can take it through 250. And then through 250, I think you're looking for 280. Back towards that previous swing high. Again, not to be a broken record, I think if we can figure out what the market wants to do first, then we can figure out how aggressive we want to be on Boeing. If the market behaves, this is really, I think, potentially an explosive setup. You're still coming out of that 3-day squeeze that fired. So plenty of gas in that tank. I like it. I think for now it's a name to buy on dips. Really solid weekly squeeze. And yeah, Jay, so everything that you see, the one thing I don't know about TradingView is if you can throw multiple charts on the same layout. Maybe one of you guys or gals know. But as far as the indicators themselves, actually, let me pull my TradingView open. I should have all the indicators up. Yeah, so the arrows on the chart, the big three squeeze histogram, the bull and the bear squeeze arrows, and then the squeeze histogram labels. What I'm saying is I'm not too sure if I can throw, 2 more charts next to this one, and then kind of build out the flex grid. Yeah, Zen, good question. So the original squeeze is a free indicator on most platforms, and the big three squeeze, which we're launching tonight, that's going to be a paid indicator. But that is a great question. What's the difference? So let's put on the OG. And remember, guys, the only thing I focused on for the last going on 10 years has been the squeeze. So what the original squeeze tells you is you have compression. Actually, Mars is a great example. What the original squeeze tells you is, hey, this stock or the market, whatever you're looking at, on this given time frame is gearing up for a move. And that's a huge part of the equation. We want to find stocks that have the potential for a bigger than expected move. That's all that tells you, though. Doesn't really tell me the 2 most important things with the squeeze. One, which way is it going to fire? And then 2, when is the squeeze going to fire? Because I don't want to just call for direction. I want to call for timing. And for those of y'all in the mastery, I think is a general statement on a lot of our trades, we've done a good job of calling for both. Where we're not sitting here for 2, 3, 4 weeks waiting for the push. A lot of times we take the position, and a few days later we're out of the trade because the squeeze just fired. Now, the original thinking with the free squeeze and the squeeze pro is they're going to call for direction using the histogram. So you find your squeeze here in Mara, and so long as the histogram is below 0, the squeeze is supposed to fire short. While you're sitting there for 3 weeks, tying up your cash in a chop fest. You have a squeeze, you have a negative histogram, squeeze is not firing short. All right, then the histogram goes positive. Now the squeeze is supposed to fire long. It does fire long, but 4 weeks later. The squeeze fired long the day we got that green arrow on the big three squeeze, telling me that now we have the structure set, now we have the momentum set, stack moving averages, everything we need for that squeeze to fire, not just to the upside, but within a matter of days. So as far as the squeeze part of the equation, that's a major difference. And then for all the labels here, those are just designed for me to keep myself out of trouble. All of my trading heartbreaks have just come from making decisions based on emotion. Trading things I shouldn't trade, and then getting greedy. So the bull target, the bear target, that tells me where I should look to take profits. When I get to my target, that label will flash green or red. Nice little friendly nudge. Little reminder, don't be a dick for a tick. Take the paycheck. And then the scoreboard just keeps the opinion out of it. So I can't look at that Mara daily squeeze and think that squeeze is going to fire long. I've got a scoreboard telling me chances of that are pretty slim. And we'll cover that more in more detail in tonight's webinar. But those are the two things I was looking to accomplish. One, can I make my job of finding nothing but that A+ squeeze a lot easier and a lot more efficient? And then two, can I remove a lot of the guesswork, a lot of those business decisions as traders that for me a lot of times were made based on emotion and opinion, not so much based on probability. It's made the tougher parts of trading a lot more painless. And what that's allowed me to do is just flow in and out of trades with a lot less emotion. So we bought ADI because at the time ADI was an A+ setup. That label's flashing green. Bulls got 5 points, got the squeeze, got the buy signal. So long as the market allows for it, I'm going to take that trade pretty much every single time. Not based on opinion, but based on probabilities. The day that changes, scoreboard changes, this label's no longer. The indicator's telling me, hey, dude, your cash is now tied up in what is no longer an A+ setup. Chart's not falling apart. Squeeze is not firing short. But probabilities-wise, this daily squeeze is no longer fully aligned for the move you're looking for. At which point, I've got to look in the mirror and really question, well, why do I want to hold ADI from here? Is it because I don't want to accept the loss? Well, that's an emotional problem. Is it because I'm fearful that if I cut the trade off and it takes off without me? That's an emotional problem. Probabilities-wise, all of the edge kind of got tossed out the window on that day. I don't care if the 50 holds. I don't got to see if the squeeze can turn the corner. I want my cash in the top shelf stuff. Kind of simple as that. US Steel was perfect, and then it wasn't. So we say goodbye. We say goodbye. Yeah, Peter, you can change the colors of the histogram. So initially the histogram was just blue for both positive and negative. I want to make these crosses just kind of visually pop a little bit more. So now it'll be red, and that's just in the settings. So that'd be on the diff. So now negative and down is bright red, negative and up is bright red, and then I'm rocking that custom blue. That custom blue. Rob. So I'm typing your name here in the search bar. Rob. So apparently your name is a ticker for Guggenheim ABC something. We took ABI off because the signals changed. And remember, there's two things going into the signals. There's all the structure criteria. Are we above these moving averages? Are these moving averages stacked positively? And then there's momentum. Sometimes we'll lose the buy signal because of a break in structure. Sometimes we'll lose that buy signal because of break in momentum. And in this case, this was a momentum thing. But say momentum was above 0 and price fell under the 50, we would still lose the buy signal. And now you're at the point where you've kind of got both. Structure's breaking a bit and momentum already broke. All right, guys. Mirza, how am I doing on time? Anybody jumping in here after me? Rob, so how do we tell which way the squeeze is going to fire? The bull arrows and the bear arrows on the squeeze. All right, so visually, guys, the only trade I'm taking, or the only trade I really want to take for longs, for shorts, on weekly charts, on 15-minute charts, that combination right there. The blue dot says, hey, you have a squeeze. And mind you, it's a modified version of the squeeze. So the compression, so to say, is a little different than the original squeeze and the Squeeze Pro. But the blue dot says, hey, you've got a squeeze. So Zillow here, right, she's fixing the bust and move. The green arrow tells me structure, momentum, moving average crosses, trend criteria. All the ingredients are fully aligned for that squeeze to fire to the upside. That's what gets me in the trade. Right? That's what got me into ABI. When that green arrow disappeared, I'm out of that trade. Might be a structure thing, might be a momentum thing. But now I'm looking at a daily squeeze that no longer has the fixins for that explosive push higher. And in that small account that I traded, I'll show you guys here. I got a few examples in here. Let me see. Blue dot, green arrow. Blue dot, green arrow. Blue dot, green arrow. Blue dot, green arrow. Netflix, blue dot, green arrows. ON, blue dot, green arrows. Pinterest. Now, Solar Edge was a short, so blue dot, red arrow. Bear squeeze. Tesla was a day trade. So 5-minute chart, but blue dot, green arrow. Same thing for Zillow. So now, based on that same thing, I could trade Intel. Got my blue dots, got my green arrows. And as long as those print, I can hold that trade looking for that squeeze to fire to the upside. That green arrow disappears. I'm losing a little bit of edge. Now it's just a daily squeeze. That's a cockapoo. That is Cocoa Beans the cockapoo. So Peter, when copy and pasting the custom Big 3 watch list, it wasn't populating, just loading. So Peter, this morning I'm going to record another walkthrough video, specifically for the watch list columns. So give me about 30 minutes, and then I'll shoot that over to the team. And then maybe they can put that on the indicator page. That way, if anything's going wrong, you might be able to figure it out. But all right, guys, I'm gonna let you go here. Cash market's about to open in 1 minuto and 30 seconds. But yeah, it's a spot for patience. It's not a balls to the wall short, but the scoreboard says it's not a perfect long. So what the patience pays is you try to put the cash to work when you have a little bit more edge. Avoid the chop. It's kind of like the Jurassic Park. Stay out of the long grass. The chop here is the long grass. But all right, y'all, as always, thank you for your time. Always appreciate it. And I hope to see y'all tonight for the webinar. Come through. It'll be a good time. But until then, have a great day, and I'll talk to you all soon. Adios.